Happy Monday, everybody. I hope you had a good weekend. We had quite a week last week in the markets, so thanks for tuning into this video. Today is March 13, 2023, and this is your Monday market update. There's more information on last week that'll fit in today's video. As the week goes on, I may come back with a midweek. We'll see. Until then, let's recap last week and preview this coming week. Markets opened Monday as they did on the as they closed on the previous Friday. They gapped higher on the open and kept up in a newsless move higher, followed by positioning for the Powell testimony. And as the two-year yield hit session highs, stocks finished moving sideways but barely higher into the close. The Dow was just up a hair, S&P up even less, barely positive, and the Nasdaq was barely negative. So as you would expect on Tuesday, based on the market closing on those sleepy numbers, the open was not much more exciting. The stocks were pretty flat, at least until Powell's prepared remarks were released. Stocks and bonds instantly dropped as the written word did not rule out a 50 basis point move later this month, and he basically greased the skids for higher and longer. For what was a 20% chance of a 50 basis point hike in March, last week, or early in the week, the numbers climbed quickly to over 50%. Geopolitics tried to steal the oxygen from the room. China did state that the U.S. and China are on a course for conflict, whatever that means. Can you say Taiwan? This should worry everyone, simply because the U.S. does not seem to have a response plan in place. Maybe they do. We don't know about it. We don't know. Powell took the time to surprise to the hawkish side again, first time this year, but about the fourth time in the past 12 months. You recall, every time the market seems to gain footing again, as I mentioned last week, Powell's made it clear, markets moving up make his job harder. So I maintain my opinion that he and the Fed heads will keep jawboning this market to keep it from running too hot or too far ahead. Though I do maintain that valuations are going to be the main driver this year, the Fed is pulling the strings in the short term. Two main things to watch before we run through the rest of last week. One, watch for the Fed and the Fed heads to start talking Fed funds with a 6 handle, more than they are now. And second, watch for growth to roll over. Neither of these things have happened yet. Just watch out. Just to review as we move on, nothing that Jay Powell said Tuesday and again Wednesday back in front of Congress was new. It is just more of the information that the markets don't believe and don't want to hear. The Dow was down 1.7%, S&P down 1.5%, and the Nasdaq down 1.2%. All that on Tuesday. Let's get back to the week. Stocks opened Wednesday, little changed. Labor data was not what the market wanted. So ADP was strong. Jolts also was hot. Markets did come for sale, but was quick to stabilize. Powell did clarify that he did say that they might go with 50 basis points, but that decision was not made yet. Obviously, the data-dependent thing. Selling brought the stocks to new session lows in the afternoon, but the stocks did rebound back, and the S&P finished higher, up 0.14%. The Dow was down less than 0.25%, and the Nasdaq up just under 0.5%. You can see the trend here, pretty flat for the week. Quick update on replacing the Fed vice chair that left for a White House job. Recall that I mentioned that we'd have to see what comes next. The front runner now, according to some, Janice Eberly, formerly under Obama. She has also been on the record advocating to have the target inflation rate higher than the 2% that the current Fed is searching for. Watch for that change. If it's hard to get to the goal, let's move the goalposts. Just keep an eye on this. Thursday, markets opened with a cautious tone. Jobless claims at the highest point since the first week of 2023, over 200,000, which is what the Fed wants to see. Bulls cannot get too much going, and then the SVB stole the show. This was the Silicon Valley Bank. You'll hear a lot about that, and essentially what could be called a run on the bank. The details are beyond the scope of this video. CNBC ran a whole evening program on it, but all you have to do is smell the same smell as 2008 and the bank crisis, and sell first, ask questions later. The market did not hold 4,000 on the S&P, and selling pressure was heavy. S&P held just above 3,900 level and ended near the session lows. Everything was about SVB, not too far removed from the trouble that FTX and Sam Bankman-Fried, or SBF, caused a few weeks ago. As resilient as this market has been, it has been on pins and needles, so this is a bit of a fear move. That's the saying has been going, when the Fed raises rates, something breaks. Not yet, but maybe. We have to see. Add this to the announcement of a whole bunch of new taxes, call it $19 billion over the next 10 years. Debt ceiling debate's going to come back into the conversation soon. Overall, you would have thought the world ended, and I do ask that you remember the volatility we've seen and we know is not gone for good. The Dow on Thursday was down almost 1.75%. The S&P down a bit over 1.75%, and the Nasdaq down just over 2%. Even after all that, Friday was the day we were waiting for. Remember that jobs number? It was higher than some estimates, but not so high, and the wage number was a bit more tame than expected. So that actually went a long way to steady the boat. That was good news for the Fed, or at least not more bad news. The SVB news stole all the oxygen from the room, though, and the selling was pretty heavy in financials and, of course, much more. Overall, the Dow was down another 1.1%, S&P down 1.4%, the NASDAQ down 1.8% for the week. The ugly details, though I will stress, we came from a 7+% positive January, so we've given it back. But this market is not unruly. It is still pretty orderly, and in most parts of it, the Dow was down 4.5% on the week, S&P down just under 4.5% for the week, and the NASDAQ down almost 4.75% for the week. Do you recognize this? Maybe not ChatGPT, but it is the algos running the show. All three major indices down about the same on the week. The computers, again, are running the show. This coming week will be a doozy. Today will be a quiet one on the eco data, but don't let that fool you. The weekend hosted news on the second biggest bank failure in the U.S. and the worst since 2008, and the fallout will continue to be analyzed and reviewed for years, but certainly nonstop today. As I said, CNBC had a special report on it last night. If you want to hear my opinions on that, let me know. They may be, making a lot of things going on. Tomorrow, Tuesday, starts the fireworks on the eco data. Small business optimism is coming out, and I do think that's important. This will determine what the small business economy, so much of the U.S. eco world, will do in the weeks and months ahead. That will be overshadowed by the CPI print before the bell. PPI will follow along with retail sales on Wednesday, then be ready for the weekly jobless claims again on Thursday. And since it is March Madness, watch for the University of Michigan consumer sentiment numbers as well as inflation expectations. Not sure there'll be enough ink left on Friday for that, but it'll be there. Next Fed meeting is March 24, and there are still a few earnings reports that will slip out. Overall, the beginning of the week will be all about the banks. Please, as much as you want to think 2008, SVB is not Wells, Bank of America, JP Morgan, and Citi, not even close. And those banks lost over $50 billion in market cap last week. This will be in the headlines, but it is not the real news. Will this be the part that breaks? And if so, can the economy hold up? All of this will be told in the coming weeks and months. Lots of noise and a slight signal if you listen closely. I will continue to bring you as much clarity as I can. As for the long game, remember your goals and your plan do not rely on this short-term news. Please keep up with the Friday planning videos. We're covering a lot of important items as we come to the end of Q1. Keep in touch, and we'll see you again on Friday. Have a great week.